This episode of On the Record is brought to you by Associated Equipment Distributors. I'm Executive Editor Kim Schmidt. Welcome to On the Record. Here's an update on what's currently impacting the ag equipment industry. The Federal Open Market Committee met on July 30th and 31st and decided to maintain the target range for the federal funds rate at 4.25 to 4.5%. During the Dealership Mind Summit in Iowa City last week, Greg Roberg, Vice President of Sales at AgDirect, shared some perspective on the Fed's announcement, as well as what he thinks we can expect in terms of potential rate cuts by year end. He says holding at the current level was good news. The Fed meets next in September.
They're about 65%, we could see a quarter. So September today, what we know is looking likely we could see a quarter, at least a quarter. That'd be my guess. In September, you get out, then they meet in October and December. October is like 87% chance, and December is like a 99% chance. So that is some good news. We look like we're going to get at least one quarter rate exception, rate decrease this year. December looks like roughly a 50-50, maybe a little bit better chance of getting a second one. So it looks like we're going to get at least one rate cut before the end of the year, better than a 50-50 chance of two. So for those of you that are paying floor plan interest, that's some good news. For our producers, that's some good news on our operating lines. I do think you'll see fixed rates come down a little sooner than operating rates. And so for those of you that talk interest rates with your producers, I think that's some good news. So I think you'll see that first. The market is recognizing inflation's coming down. So I don't know that we're going to get any good news today, but I do think as we look out over the next 4 months or so, we'll get a little more better news on the interest rate front.
This week's dealers on the move are Premier Equipment and Ag West. Ontario-based John Deere dealership Premier Equipment announced it has come to an agreement to purchase Green Tractors, Inc. The addition of the 9 Green Tractors locations will bring Premier's total locations to 20. Manitoba-based AGCO and Claas dealer Ag West announced on August 6th that its delayed expansion plans for new dealership buildings in Russell and Brandon are now underway. Now here's Noah Newman with the latest from the Technology Corner.
Thank you very much, Kim. Well, last week I had the chance to attend the Iowa State Extension Strip Till Field Day in Crawfordsville, Iowa, ahead of the 2025 National Strip Tillage Conference in Iowa City. And the who's who of strip till manufacturers were all there as attendees got an up-close look at 11 different toolbars. And during the event, I caught up with Levi Powell, who's with the ISU Digital Ag Innovation Group. I asked him some questions about the state of strip till, and he points to technology advancements as a major catalyst for strip till adoption in the Corn Belt.
We see it growing, in a lot of different, I'll say, hot pockets is the way we see it, is you'll get a couple guys that start into it, neighbors see it, it's being successful for them. They might do some custom work for some neighbors, and it just kind of grows from there when you get a grower or a few growers started in an area, and we're getting more and more questions about it every year, it feels like. We've been doing strip till and Ames kind of within our research operation since 2016, and so we've been at it almost 10 years on a lot of our plots and programs up there. And so it's neat to see that more broadly adopted. And I think as your input costs are changing, different environmental regulations are changing, you get more and more people starting to take a look at it. And I think the biggest game changer has been the technology. We just have so much more technology today to make this easier out of the box as far as in-field guidance and guidance lines and field management that we didn't have 10 to 12 years ago. And so it just keeps getting better and better and more easier to adopt for folks.
Great perspective there from Levi. Also, Black Eagle Ag, the self-proclaimed new kids on the strip till block, were in attendance with their new toolbar. We have an interview with them coming soon to the Farm Equipment YouTube page, so definitely be on the lookout for that. In the Technology Corner, I'm Noah Newman. Back to you, Kim.
Thanks, Noah. As of August 7th, corn prices were $3.79, down 19 cents from our last episode. Soybeans closed at $9.65, down 41 cents, and wheat closed at $5.08, down 32 cents. Purdue University and the CME Group released the July Ag Economy Barometer on August 5th. The index fell for the second time in a row, down 11 points from June's reading. Michael Langemeyer and James Minert with Purdue's Center for Commercial Agriculture say the decline was fueled by U.S. farmers' weaker perceptions regarding both current conditions and their expectations for the future. They say weaker income prospects in 2025 were largely responsible for farmers' weaker appraisal of current conditions. However, producer sentiment remains much more positive than at this time last year, with nearly 3/4 of July's survey respondents reporting that the U.S. is headed in the right direction. Concerns about weak income prospects in 2025 were evident in the July survey as the Farm Financial Performance Index fell 14 points compared to a month earlier. This month's decline left the index at a reading of 90, indicating that more farmers expect weaker rather than stronger income in 2025 compared to 2024. In turn, the decline in farmers' income prospects helped push the Farm Capital Investment Index down.
The Farm Capital Investment Index fell 7 points to 53, but that was still 15 points higher than a year earlier. So the investment index, if there's one that kind of surprises me is that maybe the strength we've seen in the investment index. And now it's not back to the levels we saw in 2020 and early 2021 when the index was above 90 for a period of time, but it's still quite a bit stronger than a year ago. And if you look at the responses to the question that index is based on, the percentage this month reporting it's a good time to make investments did fall to 20% from 24%. A year ago, that good time percentage was 13%, and the percentage reporting bad times rose to 67% from 64% in June. But it's interesting that we're getting 20% of the people saying that it's a good time to make investments. When historically going back, we were hovering around 10% not too long ago, a little over a year ago. Explain that for me.
The only thing I can think of is we've got some livestock producers in there that are primarily livestock. Maybe they have some crops too. There's a lot of diversified farms in the Western Corn Belt that perhaps think this is a good time. That's the only, maybe that's stretching a bit, but that's the only thing I can think of that might be propping this up a little bit.
Well, that's a pretty good explanation, I think, and it probably is a supporting factor.
While our latest dealer sentiments and business conditions report show that dealer sales forecasts for 2025 remained unchanged in June at down 12%, some dealers are considering lowering their outlook. At the start of the year, dealers were forecasting sales to be down 10% this year, which has been the case looking back to the fourth quarter of 2024. Since February, that forecast has held steady at down 12%. In the latest survey, however, one dealer said, early order program price increases were higher than we expected, compounded with less discounts and mitigated funds has pretty much halted any momentum that we started to see. We are now considering lowering our full-year outlook on new and used sales if something doesn't change on pricing. Another dealer noted that Case IH continues to raise prices and cut discounts across equipment and said it's putting more pressure on equipment sales in an already depressed market. One Deere dealer noted that the OEM continues to match the dealership's pool funds, primarily to help dealers move used inventory. Overall, commentary suggests incentive programs appear to be slowing month over month across OEMs despite depressed farmer sentiment. Early order programs are showing pricing up about 3.5% year over year. Dealers who responded to the survey suggest that tariff-related price increases are likely baked into model year 2026 pricing. Kubota reported its earnings for the first half of 2025 on August 5th. For the first 6 months of the year, the company's total revenues were down 7.9%. During the first half of the year, Kubota's Farm and Industrial Machinery segment revenues declined 9.7% year over year. Overseas revenues for the segment were down 12.4% versus last year, and the company says in North America, its CE sales were down because of backlash of the inventory replenishments in the previous year. Sales of tractors were also down due to the slowdown in both the residential and ag markets. As always, we welcome your feedback. You can send comments and story suggestions to kschmidt@lessitermedia.com. Until next time, I'm Kim Schmidt. Thanks for joining us.